Welcome, everybody. Thank you for joining us today. My name is Sean Moss with Down Payment Resource. We have several members of our team with us today whom we will introduce shortly. Today, we're going to talk about the basics of down payment assistance programs and really homebuyer assistance programs, because we're going to break down some of the more common types of programs out there and give you, the agent, what you need to know in order to strike up conversations about these programs, engage or educate prospective homebuyers, and let them know that there are solutions out there to help them expedite their home ownership journey, cover down payment, reduce ratios, among other benefits. We want to keep this interactive, so we will be in the background answering questions as we go. Please enter any comments. If you've worked with the DPA recently or a client that used the down payment assistance program, we would love to know about that. We would love to tell that story, maybe turn it into a blog post or some other sort of kind of co-marketing. We love to tell those down payment assistance success stories. My name is Sean Moss with Down Payment Resource. I'm going to kick this off here and introduce Will Medina, who is going to be our speaker. So keep this interactive, use the chat feature, use the questions feature. Let us know if you have any questions, comments, success stories, case studies. If you've got down payment assistance information on your website and it looks really cool, we'd love to see that. Feel free to share anything and everything and keep this interactive. So with that, I want to introduce Will Medina. He's one of our DPA analysts on our research team, and he's going to take it away from here.
Thank you, Sean. Thank you very much. Welcome, everybody. I'm Will Medina from our DPR team. And we also have with us, you've just heard Sean Moss, our EVP of Product Development and Operations, Veronica Kandawal, our VP of Housing Finance Agency Relations, and Marcy Ash, our Director of Strategic Projects. They will be answering questions in the background, so use the Zoom questions feature to engage with them as we go. And before we get started, please note that today's recording of the webinar will be shared with everyone. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard-to-find resources like DPAs, grants, MCCs, and other assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. Ultimately, we are here to help you connect home buyers to the down payment help they need. So today, we will discuss loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. Of all the homebuyer programs out there, 73% are some sort of down payment or closing cost assistance. That's really a catch-all category, though. We'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 63% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 43% are forgivable, either in part or in full, essentially becoming a grant over time. And 38% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. We'll break these down further, as well as the affordable first mortgages and tax credits, or mortgage credit certificates, in a moment. These programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who funds and administers these programs? I mentioned every state has at least one housing finance agency. City and county governments often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers, like municipal governments, hospitals, and universities, also offer their employees down payment assistance. So in looking at current DPA trends, we want to remind you that all state HFAs are open and accepting reservations. Even with COVID, HFAs had a record year in 2020, which continued through 2021. And by the way, for the LOs that are with us today, this is all purchase business. Local programs are still available and new programs are frequently added. Homebuyer education remains online and 84% of all DPAs are funded and available. All of these programs share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties, as long as they will occupy one of the units. They all still require some minimal investment from the buyer to keep a little skin in the game. Now, this can range from $500 to $1,000 or maybe more. But remember, these buyers are also investing time in the home buyer education process too. Buyers typically complete a home buyer education course to qualify for a DPA. And of course, these aren't cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. With those universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. But before we get started, we'd love some audience feedback. So Sean, what do we have for him?
So I'm going to launch a poll on the screen here. So tell us, what percentage of your business is made up of first-time home buyers? And you can click your answer right here on the screen. And again, we just want to kind of gauge our audience, see who's working largely or exclusively with first-time home buyers, who's barely doing any business with first-time home buyers. Go ahead and click your answer on the screen. We'll give you a couple of seconds here, and then we'll share the results. And we've still got a ton of votes coming in here. So we'll give you another couple of seconds, and then we'll dig into the 3 most common types of homebuyer assistance programs. All right, we still got a lot of votes coming in. I'm going to cut this off in about 5 seconds. So go ahead and answer on your screen there. What percentage of your business is made up of first-time home buyers? All right, so let me go ahead and shut that off, and let's share the results here. Well, hang on now. Okay, there we go. So we've got about 15% of you are doing just a little bit of business with first-time home buyers. 18% of you are doing maybe up to a quarter of your business with first-time home buyers. More than a quarter of you are doing, 25 to 50% of your business, maybe up to half your business is first-time home buyers. And this is actually pretty interesting. So there's a lot of you that are doing almost exclusively or the majority of your business with first-time home buyers. So I'm going to turn it back to Will here with this comment. Our goal today is to give you the information you need with those first-time home buyers, whether you are already engaging with them frequently or exclusively, and that's the crux of your business, or maybe you just deal with first-time home buyers on the rare off chance they're referred to you. We want to give you the information, the knowledge, the tools that you need to be able to have candid, open, honest conversations that are value added and that expose down payment assistance opportunities for them. So with that, I'm going to get that off the screen, and Will, I'm going to turn it back to you.
Thank you, Sean, and thank you, everyone. So the 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. But remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state as a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So we've got this awesome infographic, and I'll go ahead and work my way down. So grants, gifts that do not have to be repaid. And when we're looking at repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Deferred seconds, also known as silent seconds, repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, change in occupancy. And forgivable seconds, where some or all of the original down payment assistance is forgiven. Often a percentage of the loan is forgiven each year for a predefined number of years. For example, it's common for a forgivable DPA to be forgiven, say, 20% a year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as escrow expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions, the most common uses. All of these uses help the buyer shed the costs of purchasing and financing a new home. One of the most common misconceptions about down payment programs is that buyers must be first-time buyers. In fact, there are about 2,200 programs across the country maintained in down payment resource, and 38% of them have no first-time homebuyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to the rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, make exceptions for veterans or certain professions, or just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So for example, many stipulate that the buyer occupy the property for a certain number of years. That may be 3, 5, 7, 10 years. And then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of assistance programs. So what are some of the eligibility requirements? Most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, a FICO score of 620 or higher. Homeownership history makes a big difference too. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners too. And remember, a first-time home buyer is simply someone who hasn't owned in the last 3 years. I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, think about someone obtaining FHA financing. They need 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premiums and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to dump into savings, which has been shown to improve default rates. Increased purchase power offers a competitive advantage. Many down payment assistance programs require the buyer complete a homebuyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value, or LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and/or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. So now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's look at an example of how MCCs work. Take a $200,000 home. Buyer closes and makes 12 payments in the year. They paid 4% interest, so $8,000 in interest that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $7,500 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $10,000 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses. Or protectors could include police officers, sheriff's deputies, corrections, and probation officers, and more. So please look for these programs in your market. Another targeted audience of eligible buyers is our armed forces, active duty personnel, and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So before we get into how we access this information, I will turn it over to Sean because I believe we have one more poll for you all today.
We do. So let's launch this second poll here. So tell us how often you work with buyers who use a down payment assistance program. And again, you don't have to go to chat. You can just click your answer on the screen here. We've launched the poll on the screen over the slides, and you can click your answer there. The first question we asked was, how often do you work with a first-time home buyer? Here, we want to break that down a little further. And we want to know, how often do you work with a buyer who's used a down payment assistance program? Is that something that you've never dealt with, or it's rarely happened? Or is that something that happens occasionally or maybe even frequently? So again, we'll give you a few seconds here to answer or click your answer on the screen here. And I'm seeing some of you chime in Zoom chat. If you want, go ahead and answer the survey on the screen here. You can click your answer on the poll that's displaying on your screen. And we'll give you a couple more seconds here. We're almost at critical mass. And then we'll go ahead and shut this off. So let's do that. Let's go ahead and end the poll. So I'm going to share the results here. And you can see that, whoops. Oh, not sure what I did there. Um, well, it looks like about 10-15% of you are working frequently with buyers who use DPAs. About a third of you never work with buyers using DPAs, and then the rest of you kind of fall somewhere in the middle. So again, as with the first poll, our goal is to give you the information that you need in order to have to confidently pursue conversations about down payment assistance programs. And I think I turned that off, right? But Veronica or Marcy, can you confirm you still see Will's screen at this point?
Yes.
Okay, good deal. All right, Will, so back to you.
Thank you, Sean. So we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave this webinar. So I'll show you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's out there for you or your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. We want you to check out DPR. Let your clients know what's available and talk to your lending partners about which programs they offer. And please, let us know if you have any questions along the way. And we're continuing to onboard MLSs, and we're happy to announce that several more will be launching DPR in the coming weeks. If you're a member of one of these partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. Click it, and we will tell you or your client which programs are available for properties they like the most. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. Loan officers, we have a version for you too, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. So what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and all social media. So just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. We encourage you to get creative and reach more buyers and educate them on these opportunities. And we'd love for you to join our growing Facebook group, Down Payment Insiders, at facebook.com/groups/downpaymentinsiders. There, you can join over 9,000 real estate agents, loan officers, and even DPA providers as they discuss best practices with DPAs, first-time home buyers, working with lenders, learning from each other, marketing ideas, the list goes on. And you can listen in and learn or participate in the dialogue and engage with your peers. So before we go, I'll leave you with a case study that illustrates how important DPA info is for realtors and home buyers. Amber was a new agent in Florida. No one was helping her peers understand how down payment requirements as many of them began to explore homeownership. So she stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So tell their story, help them, and they will refer their family members and friends. And in closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. So with that, I would like to pass it over to Sean, and we'll get to one of my favorite parts, answering some questions.
Good deal. Thanks, Will. So we have certainly been busy here in the background answering questions and addressing comments. So we're going to pull out some of the most popular ones. And guys, bear with us. We still have a ton of questions outstanding, and we are trying to get to them all. But this is always a good time to just kind of reflect on the content that we just absorbed and make sure that we have clarity about anything that was presented to you. We gave you a lot of information, but we want to make sure that we were clear about it and that we communicated, the requirements and expectations about DPAs accurately. So with that, one of the most common questions we get, and we've gotten it today a number of times and a number of different ways, is how do I find the lenders who offer these programs? Or as Ania put it, I need awesome lenders who offer down payment assistance programs. I can see from chat that there are some lenders on this event today, some loan officers. Feel free to chime in. How are you reaching realtors? How can realtors reach you? But I'll address the question by saying a lot of or often when we were asked this question, we tell real estate agents to try a few things. One, check with your broker. Maybe your broker's got a lending partner that works with down payment assistance programs, knows them well, and maybe it just hadn't come up with you because you hadn't done a DPA transaction recently. Or check with your existing loan officer partners. There may be one or two at least of your loan officer partners that do offer down payment assistance programs. But again, because you hadn't had a transaction like that in a while, maybe that conversation just hadn't come up. You can also check with your state housing finance agency. They typically publish a long list of participating lenders on their website, and they will often rank top producers as well. So those are a few ways that you can find a participating lender. Check with your existing network, check with your state housing finance agency, check their top producer list. And if there's a local DPA that you like, from a city or a county or a nonprofit, ask them who submits the best files and closes on time. So wanted to address that, but Veronica, Marcy, anything else to add?
Hey, Sean, one of the questions I'm seeing a few times now is in regards to if a borrower wants to purchase in a different state than they're already located, what do they do as far as the DPA programs go?
Yeah, so we've seen that a couple of times. What is of importance here is where they are moving to. Doesn't really matter where they're moving from, but where they're moving to, that's where they're going to potentially use a down payment assistance program for the home they're purchasing from that state, that county, that city, or a local nonprofit or whomever. And they, of course, must meet the requirements of that DPA where they are moving to and get a mortgage as well. So I think that's the most critical piece. And then, of course, if there's any homebuyer education requirement, make sure that gets done. And no reason to wait on any of this stuff, which actually leads us to another question and another trend that we're seeing here in the chat. What is the best practice here in terms of process and timing? And we've seen this question a lot of different ways. What do you do first? Do you sign a contract on a home? Do you get pre-approved? Do you apply for a DPA? Do you take your homebuyer education class first? Here's what we would say. It's never too soon for a potential homebuyer to take that homebuyer education class. They're going to learn a lot about the process. They're going to learn a lot about home ownership, and they're going to be a better client for you for having taken that class. But there's no reason to wait to talk about a down payment assistance program either. So when your client is getting pre-qualified, go ahead and talk about down payment assistance programs. Go ahead and look at and talk about cash to close and where that's going to come from. And think too about what you want to request of the seller. And if there's an opportunity to leverage a down payment assistance program to cover some closing costs, then you don't have to go ask the seller and you can make more competitive bids for that client. So for all of those reasons, we would say best practice is When you get pre-qualified, that's the time to start talking about down payment assistance and cash to close and so forth. And then, understand the repercussions and the benefits down the line. I've also seen a couple questions. I did want to clarify. Will described a scenario where a buyer might be looking at, let's say, an FHA loan, and then they realize that there's down payment assistance out there. And we got some questions in the chat here that I think there were misunderstandings of what Will was saying. DPA programs themselves do not have upfront mortgage insurance premiums or MI at all. The point that was made was if a buyer is looking at using an FHA loan to buy a property, if you can show them that there's down payment help out there and connect them with one of those programs that they qualify for, maybe that buyer doesn't need an FHA loan. Maybe they could instead now qualify for a conventional loan. If they do qualify for a conventional loan, they have better monthly mortgage insurance and they would not have upfront mortgage insurance premiums like on FHA loans. So wanted to clarify that point. And then I'll pause here. Veronica, Marcy, we're still getting a ton of questions here, but any trends, any particular questions that you want to pull out and address?
If someone doesn't have Facebook, is there another way for them to stay connected with us, get information with us?
Sure. You can go to downpaymentresource.com and scroll down to the bottom of the page. There's a newsletter sign up there. Or we also have the DPA Radar. And we have a blog on our website and all kinds of resources, but I would go to downpaymentresource.com and I would sign up for our newsletter at the bottom of the website. That's the best way to keep up with us. That newsletter goes out typically twice, sometimes 3 times a month with current relevant, up-to-date news and information about DPAs, first-time home buyers, and so forth. Veronica, anything you want to pull out here?
Yeah, I have a couple. There's a lot of questions in regards to, I'm assuming, the homebuyer education classes, if there's classes for Spanish speaking. And yes, there are homebuyer education classes available for that are in Spanish out there. Another one was, how do you know what programs can be combined with each other if you want to stack?
Yeah, you want to take a crack at that?
Yeah, I wasn't sure if you wanted to or me. So a good way to know if you can, so let me back up. Typically a grant, which does not have any lien recorded at the county. So there's no actual mortgage lien document that gets recorded. It's typically a grant style funds. Those can typically be combined with a second DPA that does have a lien. A lot of it comes down to funding source as well. So an MCC, for example, is typically bond funded. So it can't be usually combined with another bond funded program. So you could have an MCC, a grant, and a second lien combined as long as the funding, only one of them has bond funds. Did I do okay?
Yeah. And I would just say with, local community programs, sometimes you can combine 2 or 3 of them. Just understand too that is adding a layer of complexity. So you need to make sure that your loan officer participates in all of those programs, and your buyer has to qualify for the least restrictive set of requirements among those programs when you use more than one. But absolutely possible. We hear about it all the time. The record we've heard, I think, is 6 from an agent in Seattle, 6 different DPAs in one transaction. I'm going to scroll through here for a moment, and Veronica, Marcy, maybe, or Will, look for some questions you want to answer. I'm going to answer a few live here that I think are pretty quick. How soon will the slides be available? Where can we find them? We're going to send out the recording and the slide deck. We will have it out by Monday at the latest. Our marketing team will package up the recording, the slide deck, and some other resources for you and get that back to you by Monday at the latest. If your buyer is using a DPA, can they use a 22AD in their offer? Erica, I'm not sure what that means. That may be a state form. I don't know, Veronica, Marcy, if you want to tackle that one, it's at the top of Q&A. So Jane asked, why does it reply to clients that I will get back to them with the details about the programs? Shouldn't the lender be telling them that? Okay, so Jane is using Down Payment Connect. And when you get a lead, yes, it tells the consumer that because they were on your page and those leads are exclusively yours, it tells them that you will be back in touch. The reason Down Payment Connect is designed that way is because nobody else gets the lead, first of all. And it's your opportunity to connect them with your partners, to leverage your loan officer relationships, and make sure that they get connected with somebody that participates in or offers these DPA programs. And then, of course, Jane, you're right, digging into the details, the nuances, the qualifying criteria of a DPA, that is the job of a lender. But the reason Down Payment Connect sends you the lead and tells the consumer that you'll be in touch is so that you can start that conversation, let them know you have those resources, and connect them to a loan officer who can in turn get them pre-qualified. Is Down Payment Connect for real estate agents or lenders? Raquel, it's for both. So if we have any loan officers here, and in fact, Will, if you want to go back to the Down Payment Connect slide, and we'll put that URL back on the screen, we'll give everybody that link. So if you want to check that out, whether you're a real estate agent or a loan officer, feel free. Just remember that if you're a real estate agent and you are a member of one of our partner MLSs, you already have Down Payment Connect for free. From the drop down, I see there are programs available. Then what do we do? I tried reaching out. So Nahed, I'm not quite sure where exactly you're seeing that. Maybe give us a little more clarity and we'll try to help you out there. But you can reach out to info@downpaymentresource.com if you have further questions. Cindy asked, and Veronica, Marcy, maybe chime in here. She asked a couple of different ways. Most lenders don't seem to like DPAs. They don't like to do them. Can you tell us why? Veronica, you want to start, and Marcy will get your thoughts.
Sorry, I was responding to another question. I will say that it's not that lenders don't want to participate. Lenders absolutely do want to participate, but there are processes they have to go through to actually approve a program. And it could be pretty extensive based on the type of program it is. For example, a state HFA, for them to be able to participate in that, there's a lender approval application, all kinds of documentation that they have to provide, and then go through different types of training. So to onboard that type of program, it takes a significant amount of time. Other types of programs, it doesn't take as long, but then it has to go through a review anyway, and they have to then become acquainted with that program because they need to know how to accurately be able to disclose it and to be able to speak to it appropriately when the time comes.
Yep, and I would agree with that. Loan officers want to be able to use down payment assistance programs, but the lenders just have to make sure that they get approved if the program requires it, and that their legal and compliance team is okay with how it's disclosed and so forth. So it's just some upfront work and approvals that have to get done. But once that's done, loan officers are very, very much on board and want to be able to use these programs for buyers.
Yeah, and Cindy, just to round that out, yeah, sure. There are probably some loan officers out there that don't want to do DPAs and don't want to maybe deal with first-time home buyers. That's fine. That's their business model. They just probably won't get your first-time home buyer clients. And if they're not looking for purchase business right now, that's on them. That's their strategy, and good luck to them. But I would focus on who's going to help your first-time home buyers and who has the products that they need to solve their obstacles to home ownership. Let's see. I have so many buyers that are always asking for these programs. Lee Maurice, yes, more and more. We think that's going to be the trend. We think that buyers are learning more and more about these programs, and they're going to drive demand, and we need to be ready to serve them. Back to Cindy's question, why wouldn't a lender want to offer down payment assistance when that's what's going to help build a purchase pipeline and bring more buyers into the pipe? Lou Maurice also asked if she needs help in Florida. So for anybody, guys, if you need information about state-specific programs, then Will, if we can move on from the Down Payment Connect slide here, and let's go back to our contact information at the end. You can always go to downpaymentresource.com, or you can email us at info@downpaymentresource.com. But if you go to downpaymentresource.com, you can do a search anywhere in the country for down payment assistance programs. Will showed you who our MLS partners are. We have more coming, but you have full DPA data integrations with those MLSs and the Down Payment Connect tool. So let's see, we've got a few more minutes here. We still, guys, there's no way we're going to get through all these questions. So we're going to leave the contact information up here. But let's see, Will, are you seeing anything that you want to address? And then Marcy, Veronica, maybe we take one last round here. I'm going to try and fire off some quick answers here while you address maybe one more question you want to get out there. Veronica, you want to go first?
I don't see anything. Can you come back to me?
Sure.
Sorry.
So here's one that we get a lot. Do we have any clarity about working with I-10 clients? There are some DPAs that will allow varying citizenship statuses. It depends on what state you're in, but I would look to your state housing finance agency first and go from there. Lenders that service Georgia. Okay, so I'm seeing referrals being thrown out in the chat. That's great, guys. If you're a realtor looking for a lender, then ask in the chat. We got all kinds of loan officers on here too. If you're a loan officer, hey, you know what? Throw your info out there. You'll get a call. Just make sure you say what state you're in. And you can also use our Down Payment Insiders Facebook group. So, Marcy, anything you want to address in here?
I see that there's some questions regarding, how do they use down payment assistance when there's multiple offers on a property?
Yeah, that's a good point. So some of the benefits when you're in a bidding war, and we've hinted at a few of these, but if you have a down payment or closing cost assistance program and you can cover the closing costs between that and whatever funds that your buyer has, you don't have to ask the seller. That's a competitive advantage. If you can get pre-qualified, if you can get pre-approved and underwritten up front, even with the DPA, and offer maybe something like a short close, then that's another benefit. If you can use a down payment assistance program to improve from FHA to conventional first mortgage products, rates, pricing, and MI benefits, that's another benefit. We know that sellers are balking at FHA offers or DPA offers. So if you can use a down payment assistance program to get your client into conventional financing, they've got a better mortgage deal and you've got a better chance at winning that bid. I would also point out that you don't need to over disclose. Disclose what's required. But if you don't have to disclose source of funds, then don't. It's not the seller's business. If you're required to do so, or however your state forms and state disclosures are laid out, obviously you have to answer the required questions and address those. However, don't over disclose. We would give you that advice, and we hear that from real estate agents all over the country all the time. So there's a few tips and tricks that can help you win bidding wars. Marcy, anything to add to that?
No, you covered it very well.
Hey, Sean, real quick. One, Will is having technical difficulties. He's lost his ability to control anything. He can't unmute. He can't move slides. He can't see buttons. So I just wanted to let you know that. But also another question that's came in real quick is in regards to how do you use DPR, and maybe to start including an explanation in our presentation in regards to the steps in utilizing DPR. They're saying there's been searches done and many programs show no funds. I just wanted to address the no funds thing real quick. Programs, nonprofit and municipality, more local programs do come in and out of funds throughout the year. Funds come back for them. Sometimes programs don't get funding for a while. So that's when you'll see the no funds on those programs specifically. And that's why, because they're just waiting on more funds to come or be allocated to them. But we do also have a YouTube channel. There's videos out there. There's videos on our website as well on how to utilize our tools. So I just wanted to throw that out there real quick. Anything to add to that?
No, that's great. I do see another, well, actually, I will add 84% of all of the homebuyer programs across the country right now are funded. So you shouldn't in any market be seeing a whole lot of them that don't have funds. But yes, funding is seasonal for some programs. It's not for others. There are programs that are perpetually funded, but there are some seasonal ones. That said, the vast majority of programs at any one given time are funded and available. I'm seeing a couple questions here as we dig in. And guys, we're going to wrap up here pretty soon. There's no way we can get through all these questions. So reach out to us at info@downpaymentresource.com if you have any further questions after the webinar. And we will, of course, send out the recorded webinar as well as the slide deck afterwards. That'll be out by Monday at the latest. But I do want to address one more thing, and I've seen this in the chat here a couple of ways. I've seen this in the questions. Leslie, in a way, Nicole, and some others of you have asked, is a DPA transaction going to take longer? Or is it more difficult to get approval? Or, variations on the question of, does a DPA transaction take longer? Here's our answer. And again, I would ask that loan officers on this call chime in. A loan officer who knows what they are doing, is savvy with the DPAs in their market, is not going to prolong the transaction. And I'm not making it up. That's what we hear from loan officers all the time. Not a week goes by where we're not part of an event or we're not expressly told in marketing content or through an interview or webinar from a loan officer, I will close in 30 days. I will close in 25 days, whatever the market norm is. Most DPAs are not going to slow down the transaction. So with that said, yes, there are some DPAs out there that require a second look by the DPA provider, or they want to see a closing package before closing, but you have to account for that. So I want to leave everybody with a couple of best practices. When you're working with DPAs, leverage your loan officer. There are some on here. I can see it in the chat. They're giving you their information. They're answering some of these questions. They know what's going on with these DPAs if you connect with a loan officer who's savvy with these. If you are working with clients that you think will need a down payment assistance program, don't wait to do the homebuyer education class. Get that done as soon as possible. They will get a certificate of completion that's good for a year. So don't worry about that expiring. Let them get that done now. Somebody asked about cost for those courses. It's minimal if there's a cost, but let them get that homebuyer education class done as soon as possible, or encourage them to do so. Get pre-qualified as soon as possible. Get pre-approved as soon as possible. And there is a difference. I'll let your loan officer explain that. But talk about down payment assistance up front. One of the reasons that a DPA can cause a delay is when you're under contract, you're 2 weeks out from closing, and you got to pull new bank statements, and all of a sudden everybody realizes, there's no cash to close. That's not the DPA's fault. That's the people's fault. You got to look at that stuff up front and plan for that. So there's just a few tips and tricks, but the more you get done up front, then the better off you'll be down the road, and the more you'll prevent any issues or delays or obstacles. So with that, I think we'll go ahead and wrap it up here. We're sorry we couldn't get to all the questions. We can see a lot of contact information being passed through the chat, so that's great. Loan officers, thank you for chiming in. Realtors, talk to your existing loan officer partners. Talk to your state housing finance agency. Talk to some of your local DPA providers. Ask your broker or your peers if they have a lender that they know does down payment assistance really well, and connect with that partner. Loan officers, you can see the demand here. If you're not reaching out to agents and letting them know that you offer DPAs, then you're not interested in purchase business. That's what they're out there generating, and they're looking for your help. So, not pointing fingers. Hope that was helpful. You guys all have a wonderful day. We will be back in touch by Monday with more resources, with the recorded webinar. In the meantime, again, reach out to us at info@downpaymentresource.com if you have any questions after the webinar. Thanks a lot. Enjoy your day.